Hi traders, over the last months of November and December, we have seen that India's volatility index or India VIX has jumped up by nearly 20 to 30%. This means that the entire market behavior has shifted. The way the premiums behave for option sellers and buyers, that has also shifted, and it comes with a lot of volatility as well. When this happens, you will also have to change your own trading style, otherwise you will get caught in this volatility as well. So in this video, let's quickly look at what exactly is India VIX, how you can calculate the possible monthly, yearly and even weekly movements in the index with just this India VIX number, and how also, if you are a trader, how you can manage your trading styles accordingly. So welcome to the video. This is Ajay. Let's get started. So let's quickly look into a simple definition of what exactly India VIX is. So when we're looking at the white paper of India VIX itself published by the NSE right here, we can see that India VIX is nothing but an index which indicates the possible volatility in the market over the next 30 days. So as the India VIX number increases, the volatility in the market increases. As the number decreases, the volatility in the market is also expected to reduce. So the value of India VIX is calculated by a very complex equation which takes into account the premiums of far out of the money options in Nifty for this month as well as the next month. And we know that option premiums are known as the risk for the option seller. That is, if you're selling an option for a premium of rupees 10, that means that 10 rupees itself is defined as the risk for the option seller. So whenever this premium at far out of the money strikes increases, we can see that India VIX also increases. So the volatility increases, it also means that the option seller's risk as defined by this index, it would also increase. And we'll quickly look into what India VIX indicates for the Indian markets for the upcoming year. So India VIX currently is, as of today, it's trading at 13, and now the index spot, it has hit an all-time high today. It is trading at 21,894. So we'll quickly open the calculator here. So let's look at what India VIX is indicating for the Indian markets over the next year. So when we're looking at the index spot right now, it is at 21,894, and what simple thing that we have to do is multiply it by the VIX value right now and divide it by 100. So we can see that India Nifty 50 in India has a possibility of moving 13% up or 13% down over the course of the next 12 months, and therefore it is predicted to have a move of plus 2,848 points or minus 2,848 points. So simple, right? A value of 13 in India VIX indicates that there is a possible upside of 13% in Nifty 50 over the next 1 year, or there is a possibility of a 13% downside again over the next 1 year. So if we want to calculate the expected movement in Nifty over the next 1 month, what we have to do here is, there are 12 months in the year, right? So we have to come here, take the square root of 12, which is coming out to be 3.46, and what we have to do here is come and divide the India VIX value by this 3.46 number. So India VIX is now at 13.01 divided by 3.46. That will give you a value of 3.76. All you have to do is multiply the index by this number and divide it by 100. So this will give you a value of 823. So over the next 1 month, 30 trading days, the expected movement in Nifty is plus or minus 823 points. And if you find the square root of 52, you can find the exact same logic or the calculation for 1 week's volatility in Nifty. So we'll quickly look into different segments of traders and what all you can do as an intraday trader, as a swing trader, as an option seller, and even as an option buyer, so that you can make money from this market. So when the market becomes more volatile, I would say there is a higher probability of good breakouts and good breakdowns happening. Whenever there is consolidation, it is the enemy of a trend following trader. So a good volatile market, in my personal opinion, is a good thing for any trader. The only thing that you have to accept and understand is that the higher volatility in the market will force you to make some changes to your trading strategy. If you don't do it, you will get your hands burned. So in the case of an intraday trader, I would say it's a good thing because he is not holding the trade so very long. He would be getting better breakouts, better breakdowns, and this will indeed help help him make more profits in the market. And again, if position sizing is what is killing you, that means if you're able to make money on certain trades but you're losing too much money on your losing trades, do check out this video where I've talked to you in depth about a position sizing calculator that will ensure that you end up profitable in the long term. That is for an intraday trader. If you're a swing trader, what do you have to do? Since your holding period is much higher than an intraday trader who will get in and out of stocks within 30 minutes or even a few hours, the swing traders will have to be in their position for even 1 week or even more, right? So what you have to do here is that you have to understand again that the market comes with higher volatility. You have to adjust your targets and stop losses in such a way that you're not just looking at a very nearby stop loss. That means if in a large cap your usual stop loss is around 4 to 5%, you might have to add an additional buffer of 1 to 2%, taking it to 6 to 7% as your stop loss for that trade. Again, your risk to reward will not be affected if you're into a good trade. The breakout, when it does happen, you're waiting for that breakout, right? When it does happen, it will be more stronger than in a consolidating market. And the only thing, once again, that you have to follow here, whenever the stop loss criteria of your trade is higher, you will have to reduce your position sizing. So again, do watch this video. I'll even link the calculator down in the description. So go check it out. Do make sure that you follow the calculator and only after that you take the trades. So now that intraday traders and swing traders are done, let's get into the option guys. So when you're looking at option sellers, in my opinion, the only thing that you have to understand here is that the premiums will increase, and when the premiums do increase, you generally tend to make more profits out of the same strikes, right? That means if you're selling 300 points up and if you're selling 300 points down in the index, you would generally make more money because the premiums are higher. And that is the point that I want to get into. For OTM option sellers, that is people who sell out of the money call options and out of the money put options, do not try to over leverage yourself. Because the volatility is higher, the premiums will be higher, and my suggestion to you is try to move to a further strike, thereby increasing your probability of profits. Option selling is definitely a game of just increasing your probability of profits, reducing your losses when you have them, and if you do this, you can definitely have that done, right? Do not try to go for crazy high profits when the VIX is high. Instead, try to go for sure shot, increasing your probability of profit, right? So if you are selling 300 points away earlier, so try to sell 450 or even 500 points away right now, because for the same amount of profits, you'll be getting much more safety. That is what my personal opinion is. And if you're an ATM option seller, if you're selling at the money options, right? Again, option sellers, this VIX, India VIX of 14 or higher is a really good time for option sellers, somewhere between 14 and 24 in my opinion. If this is happening to you and you're an at the money option seller, that means there is a whole lot of fluff in the premiums that is available for you. Fluff, or you can call it froth for that matter. So all this fluff or froth or this IV is yours to gain, right? So if you follow your strategy very well and you have backtested it really well, the probability of profits, as I said again, will be going up. Again, you can expect higher volatility, but you will have to have some re-entry criteria and very strong stop loss criteria to make sure that you do not end up burning your hand and you increase the probability of profits and even the profit percentage for at the money option selling. And the last category is option buyers, and if you're waiting for that, I have some very sad news for you. For option buyers, generally this VIX period of 14 to 24 is not that favorable. And again, I'm not saying that there are no opportunities available, because when the market is trending, yes, there are a lot of opportunities available for option buyers to make money, but statistically option sellers are the ones who tend to make more money when India VIX is higher. And for this part, I talked to a lot of option buyers in the market who are actively trading in low VIX, in high VIX, in all sorts of environment, and this one common thing is what I understood: when the VIX is higher, try not to go for further OTM options. This is something that people will have that internal craving to do. When they see that premium of let's say 100 or 200 rupees at an OTM strike in Bank Nifty options, you might have that feeling, okay, let's go and buy that, right? But instead of doing that, try to move closer and closer to the at the money premium strike, and that also means even if you're going into in the money option buying, that is also fine. So for example, if the index is at 21,000, if Nifty is at 21,000, even if you're buying 20,900 options, call options, hoping that the market will go up, that is also fine. But again, predominantly as an option seller, I would give this suggestion. Option sellers time is when the VIX is from 14 to 28. So think about in the money option selling as well as an alternate to option buying. You'll be getting a lot of profits if you play it in the correct sense. If you're a good trader, if you can judge the direction well, think about in the money option selling, not very deep in the money, slightly in the money option selling as well. So yes, this is Ajay Ajit signing off. See you all in another video. Let me know what you thought about this one in the comments. Bye bye.